And joining us live on NDTV is Neelkanth Mishra, Chief Economist of Axis Bank, Head of Global Research at Axis Capital. Mr. Mishra, good to have you. Thank you very much on an occasion which is momentous. You know, India and the United States have been waiting for this for a long time. We're still awaiting more clarity on the contours and some of the finer details of the trade deal. And hopefully there will be a statement from the Indian government as well soon. But my first question to you, Mr. Mishra, tariffs down from 50% to 18%, markets giving a thumbs up. India's tariffs now the lowest in some competing export economies. What does this tariff thaw, according to you, truly mean at this time?
So, as you know, the IEEPA tariffs, this is under the IEEPA route. And so even the punitive tariffs of extra 25% were under this route, are subject, are only a few sectors are exposed to this. Nearly half of the exports to the US from India were not exposed, subject to this. So electronics, petrochemicals. So those had been continuing, they were growing very rapidly. But I think this is very positive from what we gather from our banking colleagues in textile export hubs like Tirupur. There is a lot of excitement, a lot of positivity. I think the most important change and the impact of this will be on the INR itself, the rupee. So you can see the rupee has appreciated significantly. In the near term, unlike, say, a stock or a bond, the rupee has no anchor. So there are no earnings, no book value, no coupons to value it on. So what the collective thought is on the rupee becomes very important. And because of this, clearly there's been a very significant turn in prospect. So that's all very positive.
Yeah.
For non-tech FDI, because it's the tech FDI that anyway been happening. So you must have seen Amazon, Google, Microsoft, Apple, they've been increasing investments in India anyway, Intel. And this means that on the non-tech side, the overhang has been lifted. So this is very positive.
Mr. Mishra, my second question, the economic survey and the finance minister's budget speech in many ways set the tone for self-sustained growth. Last night's announcement from Trump, the statement from the Indian government expected shortly, takes away a bit of volatility and uncertainty. How do you see India placed in terms of growth? The projections from the IMF were already encouraging. Does this deal materially improve India's medium-term GDP growth outlook?
The medium term, definitely. So the economic momentum was anyway looking good. The reality is that a reduction in fiscal deficits is a drag on growth.
Yeah. So
in the last few years, the central government has been very wisely, because that's bringing down the cost of capital, had been bringing down the fiscal deficit from 6.9 to 6.4 to 5.6, 4.8, 4.4. Now the hard miles have been crossed. So it is no longer, the government's fiscal stance is no longer a drag on growth. So growth in FY27 was anyway going to pick up. Unfortunately, we've been tightening monetary conditions in FY25. We have started to reverse some of that in FY26. It's been a bit of a struggle. I think there are some operational issues. But FY27, as credit growth really starts to pick up, I think the economy was going to be doing pretty well. What this deal does is, by reducing the uncertainty on non-tech FDI, and so a lot of those investments can start to come in. But I think the most immediate channel was the currency itself. So because of the persistent pressure on the currency, the monetary conditions, despite the RBI's attempts, were not easing sufficiently fast. But now what this does is it releases or relaxes the situation, and therefore the RBI can start pushing for credit growth again.
Does this deal strengthen India's case as a China +1 manufacturing hub? We know there's been a whole amount of talk on the opportunity that presents itself to India, given the global dynamics of this time. What do you think, sir?
So on the hardware tech side, clearly that had already started happening. So even before the deal was announced, as you must have seen, the Ambassador Gore had mentioned India as part of Pax Silica. This came before this deal was done. So on the hardware tech side, on the very fact that Intel signed an MOU with Tata Electronics, the Intel CEO had a picture taken and tweeted about it with the Indian Prime Minister. None of this would have happened without the blessings of the US government. So clearly on the tech side, India being a very strong and very important counterweight to China has been a business reality for the US. What this does is it allows the same to happen on the non-tech side. So whether it is apparel exports, whether it is auto component exports, whether it is furniture. A lot of those value-added items which are labor-intensive, where India has a distinct advantage. This sets the stage. It also removes the overhang on the services side. So while we have always had the view that blocking services exports is going to be procedurally very hard, but there were people who had concerns that if the US and India are not on the same wavelength when it comes to trade, is it possible that services exports from India could start getting taxed? In order to arm twist the Indian government, can the US administration do something really harsh? At least that overhang is gone. And combined with the safe harbor changes that was announced by the finance minister in the budget, I think services exports, the setup of global capability centers, the demand for commercial real estate in India, all can be very strong in the coming years.
Mr. Mishra, the $500 billion figure that Trump put out in his statement has all the tongues wagging. Government sources have told us now that all this really indicates is that, with a lot of unlocked economic activity, thanks to this new deal, bilateral trade will 5x over the next few years. That's one way to interpret it. How should markets interpret this $500 billion trade target? We've seen some of it this morning, but overall?
They should just ignore it. I find it hard to believe. We are a $4 trillion economy, right? And we are growing fast. I think we'll be maybe growing at 10%, say, the next 3-4 years. To cumulatively buy $500 billion, cumulatively, you can think about maybe $200, $250 billion. With a bit of a stretch, maybe you can get to 300, 500 looks ridiculous. But as a target, as something that the economy should gun for, I think this is something that maybe sets the aspirations high. But I don't think anything like that is going to happen in the next 1 or 2 years.
Okay. Textiles, chemicals, auto appear to be the biggest, immediate term winners. Which sectors do you see as the first to show, any kind of earnings impact, Mr. Mishra?
I think it has to be apparel. So this is where the capacities are there, the staff is there. It is also a very high churn sector. So there are 4 seasons. So most likely we missed spring. But I think for summer, autumn, winter, definitely we'll be part of the game, and a very important part of the game. I think gems and jewelry, for sure. There was some transshipment that was starting to happen, which does not need to happen now. So we can start shipping directly from here. Or maybe even there, the 18% duty may actually be quite disruptive. So maybe the transshipment will continue. But the important lesson for us, and it's something to keep in mind here, is that even that 18% duty is mostly likely to be paid for by the US importer and the US consumer. So studies have shown that so far, 96% of the tariff burden has actually fallen on the US importer and the US consumer. So all that has now changed for India from that perspective is that the relative disadvantage to other jurisdictions, other countries, has now disappeared. So those would be the sectors which I think may see immediate advantage. For things like auto components getting designed into a new vehicle and then starting to produce that, it takes several quarters, if not years.
Final question, Mr. Mishra. India insists that crude buying will remain, price-based. The people's interests will be, head at the highest level. So market prices will dictate where India buys its energy from. But our sources have also told us that, India is committing to purchasing oil from non-sanctioned entities. We're yet to see that come out in an official statement and interpret that as well separately. Does all of this, in your view, preserve our energy security? Because this has been a bit of a tightrope walk and a sensitive area as far as the India-US relationship is concerned.
Yes, it has been. And I must say that it has defied logic to me that the US side has been insisting on something like this. We have written about this. The net advantage to India from buying Russian oil on a landed price basis was at most $3 a barrel. At a national annual level, it was not more than a few $1 billion a year. But the way the narrative has been spun and the way the Western media used to present it as if the whole Indian economy was thriving because they were buying cheap Russian oil. So I don't think it is that material from a cost perspective. But I think retaining the freedom to decide who we buy from is something that is extremely important. And let's see what the official statements talk about.
Neelkanth Mishra, thank you very much for speaking to NDTV. Thank you.
Thank you. Thank you for having me.